Hey fam, what's good? What's good? I hope that you're well and keeping safe. Welcome back to another one. So today we will be covering smart money concepts, right? So this is like a little introduction to it. The rest will be more, more practical examples or more information. Okay, so let's start off with smart money concept. Now, smart money concept is highly ruled by the following, right? Market structure, buy side, sell side liquidity, fair value gaps, right, and order blocks as well. Now, obviously, you can put in your actual supply and demand, right, but your supply and demand areas, you will see it now and then inside your actual charts, right? But these are the main things you're going to find yourself focusing on when it comes down to smart money concepts, right? And just because it is just 4 things that you guys are seeing, don't think that, you know what, it's going to be easy. Right? You still need to go into your charts and go identify these things, right? Because that's the only way how you're going to find yourself learning, right? If you came this far, please do not cheat yourself. I want you to complete the whole course, right? From point A all the way till now. And you know what is still to come. Okay, I want you to do that for me. Please don't cheat yourself, because everything, they are literally going hand in hand with each other, just like this. All I did was, I bite it down into smaller pieces so that you can find yourself, enjoying these actual contents. And I hope you guys are still enjoying it, and I hope you guys is taking away a lot from these actual sessions. Okay, now buy side and sell side liquidity will basically be the first thing we're going to find ourselves looking at. Right now, buy side liquidity will always be above price. Okay, keep that in mind. Buy side liquidity will always be your swing high point above price. Right, like your areas of resistance is above price. Same thing when it comes down to our buy side liquidity. Sell side liquidity will always be below price, right? Just like our areas of support that's below price, it will always be at our swing lows. Okay, now buy side and sell side liquidity. The word liquidity is literally just a pool of money, right? Resting at a certain place. Have you ever went inside an actual trade, right? Maybe you are looking for some beautiful short opportunities, right? And then you're inside your actual trade, right? Price then all of a sudden reverse, hit your actual stop loss, and then shoom, went your direction. That's liquidity right there. That's liquidity, literally, right? So let's look at buy side liquidity over here. Let's look at buy side liquidity. Now, buy side liquidity, like I mentioned, will always be above price, right? It will always be resting at these areas over here, right? Your swing high regions. Okay, now how this basically works is the following, right? Now, with everything you guys have learned throughout the actual course, right? Basic market structure whatsoever, right? Retail traders, we are also being considered as retail traders, right? Now, certain patterns which traders are seeing inside the market, right? It's too obvious, right? It's too obvious. So when it comes down to an area of support and resistance, right? Your normal support and resistance areas, right? Price love to go grab some liquidity above price or below price, right? Now, in this example over here, it will literally look like the following. Can you see that we have an area of resistance over here, right? So there will be people who found themselves going short over here, right? And have their stops placed above price right there, right? There will be people who will be doing that right there, right? Now, you also have your breakout traders who would want to wait for price to have a push towards the upside. They will have their buy orders right there with a stop loss below price right over there. Right now, a liquidity sweep is just taking the money and move with the overall direction, right? And we want to find ourselves being reactive once the market is moving in its direction. Okay, so we basically want to place our entry where everybody else's stop losses was, okay, or is. So clean. Price will find itself doing the following. Price will have an actual shift towards the upside. Boom, right? Trigger everyone's stop losses, right there, right? Basically take them out of the actual trade and trigger everyone who found themselves having some buy limits, right? To find themselves literally looking for higher price momentum, right? And then price will find itself doing the following. Boom, shift towards the downside, right? Shift towards the downside. Now this right there, that is a liquidity sweep, right? We are taking money that was literally resting all above. Well, we are literally taking money that was resting above this area of resistance right there. And this is where our smart money comes in. Okay, that's how our smart money comes in. Now let's look at our sell side liquidity. Literally the same thing, right? Can you guys see here we have an area of support, right? So what are we going to do? Boom, there's going to be traders who are going to find themselves going long right there, right? With their stops below the area of support right there, right? And you're going to find yourself having people who have some selling orders right here, right? They want to see price break below for a further continuation move down. Where the stops going to be? The stops is going to be above price right there. Right, so all price is going to find itself doing is the following with sell side, right? Sell side liquidity, price is going to find itself coming all the way down, bang, right? Everyone who stop loss was here who found themselves going long, right there, triggered, they're out of the actual trade, right? And the breakout traders, everyone who found themselves having the actual limits in right there, looking for a further continuation dip back down, right? Price is going to find itself doing the following. Bang! Shift towards the upside, right? And basically take out everyone who found themselves going long right there and everyone who found themselves going short right there as well. So we want to find ourselves participating in smart money, which is basically taking price in its overall direction. Okay, so that is it when it comes down to buy side and our sell side liquidity. Now let's look at our discount and premium area. Quite simple, keep it simple, right? Premium area, this is when price is expensive. This is basically when you want to find yourself shorting price, right? You want to sell price. Discount area, this is when price is cheap, right? It's on a sale, it's on a special. This is basically when we want to find ourselves buying price, right? Price will always find itself seeking a premium or a discounted area. Now, a premium area will be everything in between your 100 and your 50 percentage, right? So everything inside this region right there, that is your premium area, and everything below this will basically be your discounted area. Okay, now like I might mention, if price is coming from a premium area, guess what? Price will always find itself seeking a discount to have a further continuation move back up for a further continuation move back down, right? Literally the opposite applies as well. If price is coming from that actual discounted area and we are bullish in structure, right? Price will tap in a premium, will come back into a discount and then have a further continuation move back up, right? Discount in premium areas, keep it simple, right? Keep it simple. Now let's look at our swing highs and our swing lows, right? Our swing highs, like we might mention, we want to see our buy side liquidity come through at these areas, right? So a swing high consists out of an actual high. Look at this this candle over here in the middle, right? You need to have an actual high with a lower high to the left and a lower high to the right of your charts. Okay, or your actual candles. So in your actual charts, like we said, buy side is always above, always above, always above, right? So we want to see our swing highs come through at these areas right there. Okay, swing lows will consist out of an actual low, as you guys can see right there, and we need to have a higher low to the left and a higher low to the right as well, right? Swing lows is coming through with your actual sell side liquidity. So where will you find yourself having your actual swing lows? Right there at your lows, right there at your lows, right there at your lows, right there at your lows. Okay, so that is it when it comes down to swing highs and our swing lows, right? That's the only way how an index will swing high and swing low look like. There's no other way. Okay, so if you're looking at a swing high, it needs to have an actual high, a lower high to the left, and a lower high to the right. A swing low must have an actual low to a higher low to the left and a higher low to the right. Then you will only consider it as your actual swing points if it looks like this right there. Okay, now a fair value gap. Let's look at a fair value gap. Look at these 3 candles over here, right? Look at this closure of that wick right there, and the start of this wick right there. Right, this over here will be considered as your fair value gap. Right, this little gap you guys are seeing right there, that will basically be your fair value gap. Right, a fair value gap is simply an imbalance in price. Right, it's an imbalance in price. So all you're gonna find yourself doing is literally just wait for price to have a tap inside this area for you to find yourself going short. Right, price don't necessarily have to find itself filling up this whole gap, right? It does not have to do that, right? Price can literally just tap and have an actual shift towards the downside. Where will your stops be? Your stops will always be at the high of the candle, which basically started off this fair value gap momentum right over there, right? That will basically be your stops in an actual bearish fair value gap example. Let's look at a bullish one, right? In a bullish one, look at this closure of that wick right there and the open of that wick right there. This little gap, that is our imbalance, right? So all we want to see price do is tap inside our actual imbalance and have a nice little shift towards the upside. That's it, right? That is literally it. Where's your stops going to be? Below the candle, which found itself creating the or started off the fair value gap, right? So this is a little introduction when it comes down to our smart money concepts, right? So in the next slide, we're gonna cover some nice market structure examples. So I'm gonna see y'all in the next one. It's me, your boy D. I'm out.